auditors. Regulation 33 and 34 of SEBI LODR form the backbone of financial transparency for every listed entity in India. Quarterly results, annual audited financial statements, consolidated accounts, and the board's report are euros. All must be filed with the stock exchange within prescribed timelines, in prescribed formats with prescribed levels of detail. There is no discretion. The quarterly financial results under Regulation 33 must be submitted within 45 days from the end of each quarter for the first 3 quarters. For the last quarter, the entity has the option to submit audited annual results within 60 days. These timelines are absolute euros. SEBI does not grant extensions for quarterly filings. A delay of even 1 day triggers a fine of 5,000 per day for the first 15 days, escalating thereafter. The format of the quarterly results is specified in Schedule Law of LODR. It includes the statement of profit and loss, the balance sheet, the cash flow statement for the half year, and the segment-wise revenue results and capital employed. The results must be presented on a standalone as well as a consolidated basis. If the entity has subsidiaries, joint ventures, or associates, consolidated numbers are mandatory. The quarterly results must be accompanied by a limited review report from the statutory auditors. For the last quarter, the results must be audited. The limited review report must state whether anything has come to the auditor's attention that causes them to believe the results are not presented fairly. A qualified or modified review report must be fully disclosed to the exchange euro. No summarization, no sanitization. The annual financial results under Regulation 33 must be submitted within 60 days from the end of the financial year. These results must be audited by the statutory auditors, and the audit report must be unqualified, or if qualified, the qualifications must be fully explained. The annual results form the basis for the annual report that is sent to shareholders and filed with the Registrar of Companies. Regulation 33 mandates that the financial results must be approved by the Board of Directors before submission to the stock exchange. The board meeting to approve the results must be scheduled. The exchange must be informed of the board meeting date at least 2 working days in advance, and the results must be filed within 30 minutes of the conclusion of the board meeting. The clock starts ticking the moment the board gavel falls. The annual report under Regulation 34 is the most comprehensive disclosure document a listed entity produces. It must include the board's report, the management discussion and analysis, the corporate governance report, the business responsibility and sustainability report, and the audited financial statements. For the top 1,000 entities, the annual report must be sent to shareholders at least 21 days before the AGM. The management discussion and analysis is not just a statutory requirement euros, it is the board's narrative explaining the numbers. It must cover the industry structure and developments, opportunities and threats, segment-wise performance, outlook, risks and concerns, internal control systems, and discussion on financial performance with respect to operational performance. It is the board telling shareholders what the numbers mean. The corporate governance report under Schedule V of LODR is a detailed disclosure of how the company is governed. It must disclose the board composition, the number of board meetings held, the attendance of each director, the composition of each committee, the number of committee meetings, the remuneration of directors, the details of RPTs, the vigil mechanism, and a compliance certificate from the auditor or company secretary. The Business Responsibility and Sustainability Report (EURO), the BRSR (EURO) is the ESG disclosure framework mandated by SEBI for the top 1,000 listed entities from FY 2022-23. It replaces the earlier Business Responsibility Report. The BRSR has 3 sections (EURO) general disclosures, management and process disclosures, and principle-wise performance disclosures across 9 ESG principles defined in the National Guidelines for Responsible Business Conduct. SEBI has mandated XBRL (EURO) Extensible Business Reporting Language (EURO) for filing financial statements. This means the quarterly and annual results are not just PDF documents sent to the exchange. They are machine-readable data files that can be automatically processed by regulators, analysts, and investors. XBRL taxonomy is prescribed by the Ministry of Corporate Affairs and adopted by SEBI. A filing that is not XBRL compliant is not a valid file. The board's report under Section 134 of the Companies Act (EURO), which LODR incorporates our euro, must include the financial summary, the state of the company's affairs, the dividend recommendation, the amount to be transferred to reserves, material changes after the balance sheet date, the conservation of energy and technology absorption, the foreign exchange earnings and outgo, and the CSR details. This is a holistic report of stewardship. Regulation 47 requires the listed entity to publish the financial results in at least one English national daily newspaper and one regional language newspaper circulating in the place of its registered office. Within 48 hours of the board meeting that approved the results, the newspaper advertisement must appear. This is the public dissemination obligation that ensures information reaches all classes of investors are euros, not just those who access the exchange website. The audit committee must review the financial statements before submission to the board. This is a non-delegable responsibility. The committee must examine the financial statements and the auditor's report, discuss any significant observations with the auditors, and satisfy itself that the financial statements are true and fair. Only after the audit committee is satisfied should the statements go to the board. A significant development under LODR is the requirement to disclose the impact of audit qualifications. If the statutory auditor has issued a qualified report, the company must disclose the cumulative impact of all audit qualifications on the financial statements are euros, both on the profit and loss and on the net worth. If the impact exceeds a materiality threshold, the company must explain the corrective steps it is taking. Financial disclosure compliance under LODR requires an integrated system. It starts with the finance function preparing the numbers, moves to the internal auditor reviewing the controls, passes through the statutory auditor providing assurance, goes to the audit committee for review, reaches the board for approval, and finally arrives at the exchange for filing euros, all within the prescribed timeline. A single weak link in this chain can cause a compliance failure that triggers penalties and reputational damage.